Good morning, everybody.
Morning.
Hey, we're getting together for a brief meeting. We just want to go over the energy alert that I wrote yesterday. The title of the alert that I wrote yesterday is "The Risk of Higher Prices Long Term Are Increasing." And it's really based on what was written in the May 24th energy alert, in which I used an old proverb: "A bird in the hand is worth two in the bush." Some of us didn't know it at that time, but I trust you do now. And what was important about that concept, see, old proverbs stay around a long time because they're based on truth. A bird in the hand is worth two in the bush. For 400 years, people have followed that proverb, and people that followed that wisdom benefited by it. And it is pertinent right now. Now, can anyone tell me why it is pertinent right now? Why is that proverb, "A bird in the hand is worth two in the bush," appropriate for us as analysts advising our clients? Can someone tell me?
Well, because right now you can still buy power cheaper in the forward markets.
Exactly. See, we have backwardation right now. So in the forward markets, energy, natural gas, which is the largest source of generation for electricity, so they're highly correlated. Right now, natural gas starting in April 2018, all the way through, actually you can go out to April 2021. So for the following 3 years, starting in April 2018, the rates are lower than they are right now. So our clients have an opportunity, a bird in the hand, to purchase energy at a lower rate than it is right now. Now, some people are hoping it's going to go down. And last month, I mentioned that because of the technicals, many people were believing the pricing was going to go up because of fundamentals. We do have right now a structural imbalance in supply and demand. So long-term, fundamentals are saying it's going to go up. And I've learned from trading over for many years that fundamentals always win out, trump in the long term. But in the short term, technicals can trump the fundamentals. So I warned last month that because so many people understood that we had a structural imbalance, that it was very likely or possible that the market have a quick pullback. And it was going to accomplish a couple things. For the big boys, it was going to let them take profits on their nearby contracts, and also then go out into those further out months and be buying energy for what they were anticipating would be higher pricing later on. So right now, the focus in this report was the risk of higher pricing is increasing. Why? Because what I said last month has come to pass. The market has pulled back. In the nearby contract, it actually, and I showed the numbers, in the nearby contract, I think it came down 26 cents. But when you went out from April 2018 through April 2020, it was a wash. It hadn't decreased at all. So the nearbys have dropped. Now, we have a structural imbalance. One thing that will alleviate a structural imbalance is producers will stop producing more. And producers have an incentive to produce more when the price goes up, because they make more money. But when the price pulls back, there's a disincentive to produce more. So the pullback we're having right now is actually increasing the risk of higher pricing later on. Make sense? Mm-hmm. Now you need, in the report I mentioned that the risk is going up, and also right now we need to heed the old proverb, "A bird in the hand is worth two in the bush." I explained in the report why the risk is increasing, because this pullback is now causing a disincentive for the producers to produce more. If pricing had continued to go up, they would have started producing more, and that would have slowly alleviated that structural imbalance. But right now, we don't see any signs of that in the near term. The market right now is at low pricing nearby, but our clients, some of them are going to look at those nearby contracts and say, well, it could go lower. It may in the near term. That's not going to help you. It's going to hurt you. The longer it stays low, the higher it will go. The longer it stays low right now, the higher the pricing will be in the forward markets. Our clients should be risk averse. See, a bird in the hand is worth two in the bush is actually a message for people who are risk adverse. Don't take unnecessary risk. Take what you can right now, take advantage of it. Don't take a risk of hoping for lower pricing later on, which, by the way, even if it happens in the near term, it won't help you, it'll hurt you. Understand? So I hope this will be helpful when you're talking to your clients. I know many times you'll talk to someone and you have to plant a seed This is the truth. This is the truth. Many people will be saying, well, it could go lower. Or why am I talking to you right now? Let them know I'm talking to you right now because we have an unusual opportunity, a great opportunity. In the forward markets, the pricing is lower in 2018 and 2019 and 2020 than it is right now. So we are contacting you right now to let you know that. And you can now secure contracts which will protect you for 2-3 years. Understand? Any questions? Spread the word.
Thank you, Ray.
Thank you.